Traders and investors, I'm L.A. Little and this is your weekly NeoTA wrap. We take a look at these markets and we're doing it from a neoclassical perspective. That means each night we ask ourselves what happened last week and what does it tell us about the coming ones. We do this show once a week, every Sunday evening, broadcast at or before 10 o'clock Eastern Time. It's archived on YouTube and it's under the channel L.A. Little. If you want to subscribe, reach up in the right hand corner and do so. It is free and easy. Anytime I push content that's public, you'll get a notification of that. As far as what happened last week, on Friday, we had a push up. Conversely to what I thought was going to happen, we had two bar reversals that had set up on Thursday night, but Friday it was another push, a continuation of what has been happening, and that was a push up all week long. If we look at the ending numbers for the week, you can see big gains took place across the board in the indexes for the week, anywhere from 2% up to 3.5%, and it was pretty broad-based across everything. On the year, indexes are up, other than the NASDAQ, although the NASDAQ made up a lot of that ground last week. So if we turn our attention to the charts, the S&P 500, I got it up on the daily time frame. What you see here is a nice directional move again. We've seen these over and over, right, where they get going and they just don't want to stop. We had two bar reversals that we had looked at Thursday that suggested it wasn't on the S&P but almost everything else, that we would get some sort of a pullback on Friday, but it wasn't a pullback. In fact, it was a continuation of the upside move. So when you see that, the market's telling you it's stronger than you think, and you just have to recognize that and factor that in on the next set of not so much predictions but expectations. If we look at this, the resistance is right here. It's pushed right to it on the daily. That's the next swing point high. It's already transitioned back to bullish at this point, and so you have a bullish situation going on in the S&P 500. Has been the strongest index for some time. If you look at it on the weekly, the key bar seems to be back over here, the high. That's only about 4 points away. I suspect that's where it's going to have troubles, if it's going to have troubles on this push higher. So S&P setting up to try and get over a key level. If it can get over it, there's nothing up above it, a few swing point highs. As a matter of fact, if it were to break above that level, you're going to be breaking multiple swing point highs on this time frame and also on the weekly time frame after a long consolidation. So S&P is set up pretty well to try to break higher. And to re-emphasize what that looks like on the monthly basis, right? We've seen a consolidation now for almost 2 years. We've been going, this was the October, that first break about 2 years ago, and actually a little over 2 years ago. Actually it's a little less, right? It'd be 2 years this October. And so anyway, that consolidation's been going on for a long time up in this area. It's more than 2 years now. Can you break over this top? If you can, right, and you've had this long of a consolidation, even though there was a nice big strong push for a long period of time, and the expectation that we'd get some sort of a retrace, so far that correction, if you will, has taken place in terms of time, not in terms of price. Certainly not in terms of price of any kind of size to it, percentage. So at this point, S&P still looks pretty good. Now the laggard had been the NASDAQ, and the NASDAQ had tried to move much lower. I'm going to move it to the weekly. You can see the deeper consolidation here, the test of this low that held, the big push off of that. Now a pullback into a support zone that members and I had kind of identified, and now the push back out of it. Key bar so far is here, and then it would be back up here again at 50.92. Looking at it on a weekly, it looked pretty much of a consolidation. When you look at it on the monthly, you can see it pretty cleanly. It's the same sort of thing we saw on the S&P. Of course, it's a little bit weaker, farther down, has farther to go to get back to the highs. But again, attacking this key bar, that was the one we just looked at. If you can get over that, the last spot is this high up here. Most folks are still not positioned for this market to move higher. That's just natural with it being consolidating for so long. if it does break higher, there's going to be the, I've missed the train kind of a feeling, and you're probably going to see a scramble to get back in. And finally, to put it in perspective, you can see the kind of pullback. I'm going to go all the way to the monthly chart here that took place on the Russell, the small caps. Small caps were the only ones in terms of the indexes that actually broke trend. Typically when that happens, it means something. Now, it had done it once before. If you go back to 2011, it had that same sort of a big pullback, which eventually broke higher again. And at this point, the Russell is trying to do the same sort of thing, right? It's trying to work its way back up and eventually attack and potentially get over that swing point high again. That's not the normal case, but this is not a normal market and hasn't been ever since the Fed stepped in and started doing what it's been doing for the last 7 years. And so, we don't know for sure what's going to happen in the future. What we do know is what's happening now, and we take and project off of that. And right now, these markets, even though they've shown time and time again that they can come back, there's still a little ways to go before they get there. Key one, S&P and the NASDAQ, and we'll see how those behave in the coming week. If we turn our attention to the sectors, the strength last week, or actually the last week, 6 days, was in the tech sector. That started with the big push higher in the chip stocks. And I'm going to pull up the SOX here. You can see the nice big strong push up in the SOX. That gets it over these 3 swing point highs that were located here. It breaks them out and then breaks another one. And if you go to the weekly, you can actually see that one breaking out here. That was from November of 2015. So you've actually come all the way back and made new highs now year over year and changed trend. Can the SOX continue the push up? I mean, there's a big ABCD structure in place now. I think this is a key sector. If we watch this sector, this is the sector to watch because a break of this has happened. That's an ABCD structure now that is confirmed. The question is can it continue on and eventually push up here and reach this target? If it does, it will be at new highs, and I suspect the NDX will be going with it if it happens. Overseas, we continue to see good strength in Europe. The DAX was up strong. Another big push up last week. If you pull it up on the weekly, you can see how it's coming back to this breakdown bars high again. That's going to be its trouble spot. That's 10,485. If you look at the CACs also had a big strong push up last week. And again, if you look at it, it's got the same scenario there. And the leader over the last 2 to 3 weeks actually has been Switzerland. Switzerland actually makes new highs on the daily. It too is coming back into its breakdown bar topping area. If you look at Asia, of course, it's a different story. It's not nearly as strong. I'll just pull up Hong Kong here, and if we look at Hong Kong, you see a decent push last week. But this thing has a long way to go just to get back up to that area and to see if in fact we can get over it. And so that breakdown bar here is about 21,800. Nikkei, again, same sort of thing. Yes, the yen has depreciated and that's helped this index, but you can see it's way off its highs. So you got strength in Europe, strength in the United States, still weakness for the most part in Asia. Will Asia turn? Well, with the dollar going higher, I think Asia is going to have a hard time, and we should probably take a look at that dollar real quick. I'll pull up the UUP as a proxy. You can see the strong pushback up here in the UUP straight away 4 weeks now on that turn. If you pull it back to the daily, you can see it even more clearly. Big reversal on Friday when Yellen suggested that rates are in fact going to go higher. It's coming back to a key area. That's this low, it's 24.78, and this other low that's at the high of this bar, which is 24.63. I think those 24.78, 24.89, excuse me, let me get the right price in here. And that area is the key area on this dollar on a short-term basis as to what it's going to do. It's just coming into it now. Will the dollar pull back? We've got rates potentially going up in a couple weeks. We got the European zone, the ECB this Thursday. So I think the currencies are still going to be the key spot to look at in terms of overall movement in the market. What do I expect this week? Probably consolidation on the indexes, maybe a potential push in the next couple weeks shaping up. Maybe it's going to coincide with the Fed meeting, the fact that they may or may not do anything. If the market is expecting them to do something they don't, that may create the move higher and break out of this range. That's it for this week. Thanks for joining me. Have a great one. I'll see you next time.